So far this year, hotel transaction volumes have hit a new high. They've exceeded $42 billion for the first half. The key trend here we're seeing is tourism arrivals fueling this transaction activity.
Foreign capital has been steadily flowing into hotels real estate for a couple of years now. But during the first half of 2015, we've seen a surge of investment from Middle Eastern and Chinese buyers. In the Americas, investment volume from these sources have increased more than fourfold.
Much of that is driven by the type of assets which have come to the market, which investors clearly find very exciting. The purchasing pool is similar to what we've seen over the last couple of years. That is private equity and investment funds. They are most active in the US and in Europe as well. The slight difference is Asia Pac. We don't see the same level of private equity activity, and the pool that's been doing most in that region is the sovereign wealth funds.
In Europe, the Middle East, and Africa, the amount of cross-border capital pursuing hotel deals has been even more significant. At $9 billion, foreign investment into these countries' hotel markets really stands out globally. Prestigious properties that have recently been acquired with cross-border capital include the InterContinental Paris Le Grand and the Ritz Madrid.
The deal type, we're seeing similarities between Asia and the US in that single assets are the dominant deal type. In Europe it's slightly different. We're in the phase of a market where portfolios are where all the interest is.
While Chinese investors' interest in acquiring trophy hotel properties has been really well publicized, we've noticed that Chinese insurance companies in particular have emerged as the chief source of capital from within the country. This group's appetite for hotel real estate is really increasing.
So what sets this year apart from previous years is the level of cross-border capital which we are seeing. This is China into US, Middle East into Europe, but it's a very strong trend and strengthening as we see through the next 6 months. So London still remains a standout market for high net worth, concentrated on prime property. I think there's more demand this year than I've seen for a while. However, private equity is more excited by the income growth opportunities out in the key provincial cities. For 2015, we predicted a transaction volume of 68 billion. We're 60% of the way there already, and if momentum keeps up, that number will be exceeded.